Hello and welcome. My name is Michael Gill of Texas Senior Living Locators, and today we are going to discuss a little-known tax advantage enjoyed by some residents in senior living. Specifically, assisted living and memory care expenses may be tax deductible. This is about the only good news associated with the question of how to pay for long-term care. How much of these expenses are deductible, and by how much will it reduce your taxes? Unfortunately, the vague answer to this question is, it depends. Now let me just state flat out that I'm not a tax accountant, and every person's situation is different. So I'm just going to give you some general guidelines. Then I'm going to send you to your tax accountant to get specific answers as to how much money this may save you off your taxes. First, assisted living expenses may be considered a medical expense. If someone can claim unreimbursed medical expenses in excess of 7.5% of their adjusted gross income, then they can deduct the medical expenses from their income. Given that the average person in the United States living in an assisted living is charged around $54,000 per year, the 7.5% threshold seems quite easy to satisfy. Second, all of your assisted living expenses can be deducted if a person is considered chronically ill, defined as requiring assistance with 2 out of 6 activities of daily living, or if a person has severe cognitive impairment. I'm going to estimate, without any hard data to back it up, that these 2 criteria defining someone as chronically ill would mean that about 80% of assisted living residents and all memory care residents can deduct all of their long-term care expenses as medical expenses. Third, if you don't meet the chronically ill threshold, some of your assisted living expenses can still be deducted. How much of your assisted living charges can be deducted is difficult to say, and it will depend on a variety of factors, including how aggressive is your tax accountant. But I wouldn't be surprised if it were above 50% of your assisted living bill. Personal assistance care costs at home may also qualify as medical expenses, as can long-term care insurance premiums. It seems unlikely any independent living community charges are allowed to be included as medical expenses, though care costs from an outside personal assistance services agency while living in an independent living should largely qualify for the medical expense deduction. Finally, it is sometimes possible for family members to use this write-off on their taxes. This happens when you can claim your parents as dependents. Parents are dependents when a family member provides over 50% of their parents' support and care costs, and can then also meet the 7.5% threshold for itemizing medical expenses. All of this is complicated, and as I said, it requires consultation with your tax advisor. My point is to alert families to the possibility of this tax advantage. I hope this helps save you money on yours or your parents' tax returns. As ever, if you need assistance finding assisted living, independent living, or memory care in the Austin, Texas area, please call me at 512-630-7133. My name is Michael Gill. Thank you and good day.